Time for company presentation at Commodity TV. Ladies and gentlemen, welcome. Treasury Metals, the coming gold producer from Ontario. Treasury Metals is a Canadian gold company and develops the 100% owned Goliath gold project into production. The company is listed in Toronto at the TSX under the symbol TML and in Frankfurt also under the symbol TRC. Fully diluted, they have around 86 million shares outstanding and approximately 15% are held by insiders, 30% by institutions and 55% from retailers. The market cap is at around 35 million Canadian dollars. Let's talk about the Goliath gold project in more detail. It is one of a few advanced stage development gold projects in Canada, lies in a very favorable jurisdiction and has a perfect infrastructure with labor, water and power supply on site. Through the Trans-Canada Highway you have all year-round access. The average undiluted open pit grade stands at good 2.8 grams gold equivalent per ton and the average undiluted underground grade is at 5.13 grams gold equivalent based on the PEA and the resources from 2012. The new 43-101 resource estimate showed more than 1.165 million ounces gold equivalent in the measured and indicated categories and 341,300 ounces gold equivalent in the inferred one. The project has attractive cash cost of 698 Canadian dollars in operating cash costs per ounce of gold. In addition, they have a strong metallurgy with recoveries of 95% by CIL or 92% by flotation and an initial 10-year production profile. The project development moves on in 2016, of course. The preliminary economic assessment, the PEA, was completed in August 2012, outlining a 2,500 tons per day operation with production of 80,000 ounces gold equivalent per year. They could start with a high-grade open pit production, which can be transitioned into an underground operation in year 5. Optimization studies and additional drilling have been completed and will form the basis of a feasibility study targeting annual production of 70,000 to 75,000 ounces gold then. Treasury advances through the permitting process with the Environmental Impact Statement, the EIS, submitted and public comment period and federal government technical reviews are completed. So far they have no problems in the hearings nor with the natives. The feasibility study will have updated Canadian dollar and costs. The mill daily throughput rate will be optimized within a range from 2,100 to 2,700 tons per day. Potentially the stripping ratio is lower, and so the costs while maintaining grades. The initial capex shall be around 100 million Canadian dollars and sustaining similar to the PEA and the life of mine capex including underground of 200 million Canadian dollars including a 20% contingency. The total mine life should increase beyond PEA primarily in the open pit and the feasibility study will be based on a new resource estimate. Treasury is already in discussions for the mine financing. Next catalysts are completion of the 3 town hall meetings, the CEAA initiated First Nations meeting and initiated the technical review process, completion of the feasibility study and the new resource estimate. Treasury Metals has a great shareholder base, a great management with skin in the game and the company pursues straight their permitting way into production scheduled to start 2018 with production of course. They execute their time plan and again, a rising gold price will help the company even more. Check out the company. Thanks for watching us. Bye bye from Munich.